So when you look at Bitcoin itself, the moment the ISM, we've had this very low period of ISM, and that was driven by this very flat dollar, and also by rates staying higher than normal. But as the ISM starts crossing 50, economic growth comes back, earnings come back, household earnings come back, stuff gets reinvested in markets. So at this point is when Bitcoin super accelerates. And that point lies ahead. We're about to see that point now. Now, we haven't shown it on this presentation, but we've also imputed how it reacts to ISM. And if we get to that 57 ISM, that puts Bitcoin at 450,000.
Raoul Pal explains that Bitcoin's next big surge is tied to economic recovery indicators, particularly the ISM index crossing above 50, signaling stronger economic growth and rising earnings. This recovery boosts liquidity and investor confidence, which typically leads to a rapid rise in Bitcoin's price. Pal predicts that if the ISM reaches 57, Bitcoin could soar to around $450,000, driven by these macroeconomic factors rather than mere speculation. He highlights that global liquidity, measured by global M2 money supply, is currently at all-time highs due to coordinated central bank actions and regulatory changes forcing banks to increase money creation. This liquidity cycle, linked to the regular refinancing of global debt, historically aligns with major rallies in both equities and crypto market. Pal points out a near 90% correlation between global liquidity growth and Bitcoin's price movement. Despite this positive outlook, investor sentiment remains very cautious, with many still fearful due to geopolitical and economic uncertainties. However, Pal sees this fear as an opportunity since forward-looking data suggests a strong economic rebound is imminent, which should drive more capital into Bitcoin and other risk assets, sparking another bullish cycle.
So let's look at this liquidity cycle, break it down a little bit. So when you look at it, global M2 is a good proxy for total global liquidity. Why I use this on these charts is it's more real time. Total global liquidity is takes a longer to calculate for the various data inputs. But global M2 does a very good job. Again, like the dollar version, this is wildly outperforming what happened at the Trump previous cycle. So we've got plenty of dollar liquidity. Global M2 is driven by two things: the dollar itself, which is why it's accelerating so much, and then the global financial system, that's the banks. And what they're doing now, all of the governments around the world and the central banks are forcing the banks to buy debts. Basel IV is a reason behind that. The new changes to the SLR in the US. All of this is a way of forcing bonds and debt into the banking system, and then forcing the banks to create more money using them as reserves. It's just another way of debasing the currency. So global M2, when we look at it outright, it does the same pattern every time. These patterns repeat not out of voodoo, it's because it's driven by the debt refi cycle. The average maturity of global debt is 4 years. They're all between the 3 and 5 year sector. There's some long-term debt. Nobody can issue long-term debt because the market won't absorb it. So what we find is we're shorter term. Every time we do this, we have a breakout, a retest. So this was the 16-17 cycle. This is the equivalent one, I think, now. Breakout, retest, explodes higher, does this whole liquidity tightening. That's the bear market. That's when the economy slows down. That's when rates go up. Does the same thing. COVID gave it a false, a double shot. It did it again. We're doing exactly the same thing. It's almost a complete repeat of the 2017. So what we're seeing is global M2 at all-time highs. That should mean all-time highs for asset prices. That's how the world works. What we've also got here is global M2 against Bitcoin. So it's the same chart, but now we can see what happens to Bitcoin every time this happens. It breaks out, retest, and then Bitcoin starts hitting the next leg of the banana zone. Usually you start the banana zone a bit earlier with the breakout, you have the correction, and then it goes. And I've talked about this, there's 3 phases of the banana zone. Phase 1 was Q1 last year, as we started to break out in all these measures, new all-time highs in liquidity. Bitcoin goes to all-time highs. We have the corrective period, which is the correction zone, and then we get the banana zone part 2, which is usually alt season. This is the fabled chart that everybody in the world has copied from me, but this is the global M2 chart versus Bitcoin with a 12-week lead. It's been like voodoo. It is the most voodoo-like chart I've ever come across, and it works. Will it work entirely? Often what you find is later on, Bitcoin outperforms global M2 because of the speculative mania that builds over time as people realize what's going on. What it tells us is the back end of this year is basically a one-way street with a few corrections. The corrections will be normal. You will be questioning me saying, is it all finished? Is the banana zone finished? Is it all over? Do I need to get out now? And generally speaking, just follow the money. It really is that simple. The other thing is, okay, well, with the dollar and the banking systems doing this, well, the other thing that's doing it is the central banks. China is starting to print money. China has, I think, by my measure, 3 to 4 trillion to print, but they need the weaker dollar. They need to agree the tariffs with the US. In exchange, the US will continue to weaken the dollar. They will allow the dollars into the Chinese system so they can refi all of the dollar debts. And a lot of China debts, all of the corporate debts are in dollars. So what happens is we're starting to break out, and that adds to this push of liquidity. So it's not just the weaker dollar itself, it's not just the banking system, but it's the central banks starting to pump liquidity into the system as well, because they've all got to roll the debt. And that's why it is so cyclical. Every time the total global liquidity index breaks out, again, the same thing with M2, the market goes higher. And the reason being is I talked about the correlation. Well, here's the chart. It's a 90% correlation with weekly global liquidity. That's Bitcoin. And the NASDAQ is a stunning 95%. And so it's hard to refute that this is not what is happening. It's so obvious, but most people want to refuse to believe it. They start mid-curving the whole thing, saying, well, that's not the printing of money, and this is not how it is. It's so clear in the data. It's so obvious that this has been going on. And even when you listen to Scott Bessent speak or Janet Yellen speak, they all talk about this. They talk it about in the terms of basically the everything code framework.
Raoul Pal expects Bitcoin's next big surge when the economy shows clear signs of recovery, especially if the ISM Manufacturing Index rises above 50, signaling growth and stronger corporate earnings. He predicts that at around 57 on the ISM, Bitcoin could hit $450,000 due to improved fundamentals. He also highlights that record-high global money supply and easier bank lending create plenty of liquidity, which fuels big rallies in stocks and crypto. Despite current caution, Pal believes this economic rebound and liquidity boost set the stage for a strong Bitcoin rally.
Let's get back to Pal's video.
Business cycle. Business cycle is currently weak. The business cycle is the most important cyclical factor. It drives, it's part of the global liquidity construct. So the business cycle actually came out today or yesterday at 48.7, slightly weaker as we've been expecting. Bitcoin's already priced it down to 47.4. So Bitcoin's already priced in the bad news. But the good news is financial conditions lead it by 9 months. It's a very useful tool. And it's telling us that we're going to see the business cycle pick up super strong. And this will keep going. I think we'll end up in the 60s. It also prices Bitcoin by doing this. And so when you look at Bitcoin itself, the moment the ISM, we've had this very low period of ISM, and that was driven by this very flat dollar, and also by rates staying higher than normal. But as the ISM starts crossing 50, economic growth comes back, earnings come back, household earnings come back, stuff gets reinvested in markets. So at this point is when Bitcoin super accelerates. And that point lies ahead. We're about to see that point now. Now, we haven't shown it on this presentation, but we've also imputed how it reacts to ISM. And if we get to that 57 ISM, that puts Bitcoin at 450,000. Is it exact? Will it be exactly that? No. But all of the people who are saying it's going to 150, 250 are probably scarred from last cycle without looking at the forward-looking data. So it's incredibly positive for me. It also is what drives altcoin season. So the fabled altcoin season, everyone's like, it's never going to happen again. It's just a function of the business cycle. Why? Because household earnings are still subdued, because the business cycle is subdued. Average businesses outside of technology have subdued earnings. The moment the business cycle picks up, everyone has spare cash. Cash gets recycled into assets. People move further out the risk curve. So altcoins are exactly the same as credit spreads, small caps, emerging markets, junk bonds, all of this. They're all exactly the same thing. They're further out the risk curve. the business cycle actually drives all of it. It's also the same with fine wines. It's also the same with Rolex watches, all driven by the same thing. So we all want to see the ISM above 50. We've got the forward-looking data to say it's going to happen pretty soon, and that's going to be a very big signal to us. Usually that will happen as Bitcoin starts breaking all-time highs, which we imagine should happen pretty quickly, because that's every time that happens when we start to see these liquidity conditions. But the problem is nobody believes me. Everyone's like, no, but the markets and Trump and tariffs and geopolitics and China and then Russia and that's all and what you've all done is price in maximum fucking fear. At every point, you've got, this is number of stocks with a 40 days RSI below 30. This was before the rally really started. One of the few ever, this is the same as we had at COVID when the world shut down. It's the same as the Russian default and the Asian crisis. People are crazy with fear. Investor Intelligence Survey, percentage bullish, all-time record lows. The least bullish people have ever been in history. And the forward-looking indicators tell you the economy is about to explode higher, and people are massive bearish. What was interesting is we just saw the charts coming out today was that retail investors had been buying the dip. Institutions still haven't. They're all massively underweight.
Raoul Pal outlines a compelling case for Bitcoin's next major rally, driven by a recovering economy and expanding global liquidity. He points to the ISM index as a key indicator, suggesting that once it crosses above 50, economic growth and earnings will improve, fueling increased investment in risk assets like Bitcoin. Pal's analysis, grounded in macroeconomic cycles and debt refinancing patterns, projects Bitcoin could reach as high as $450,000 in this cycle, much higher than many expect, thanks to coordinated global liquidity injections and structural financial trends. Despite this optimism, Pal notes that investor sentiment remains unusually bearish, with institutions still cautious and retail investors quietly accumulating. This disconnect between strong forward-looking economic indicators and prevailing fear could create a powerful market squeeze as confidence returns. For crypto investors, his message is clear. Focus on macroeconomic fundamentals and liquidity trends rather than short-term headlines. What do you think? Is Raoul Pal's $450,000 Bitcoin prediction realistic given current economic conditions? How are you positioning yourself amid this mix of cautious sentiment and rising liquidity? Share your thoughts in the comments below.